Well, hi there, and thanks for joining me to talk about the basics of auto insurance. My name's Carol Roberts. I'm the Community Resource Development Agent at the University of Florida IFAS Extension Office in St. Lucie County, Florida. We're going to focus today on what we really need to know to choose the right automobile insurance coverage for our budget and our needs. So let's get started. We purchase auto insurance coverage because it's likely that we'll be in an auto collision at some time in our lives. How likely is it? Well, the National Highway Traffic Safety Administration says that there are more than 6 million reported motor vehicle accidents every year in the United States, and another 10 million collisions go unreported. Those are those minor fender benders where somebody says, I'll just fix it myself. That's a lot of collisions. And the reasons for those collisions? Well, a lot of driver-related factors, mostly driver-related. Operator error, so caused by impairment, fatigue, you're tired and sleepy and it's hard to concentrate. You're distracted by all kinds of things in the car, kids, other drivers, other passengers, your cell phone, whatever you're eating, the radio, all those things cause us to not pay attention, and that's when collisions occur. And unfortunately, crashes are the leading cause of death for our youth, age 3 to 33. We can reduce that with a little bit of effort. But, that's an alarming statistic and something that we need to take into consideration when we're looking at how much auto insurance coverage we need for ourselves and our families. And if you happen to be in an auto collision, it's going to be probably going to be costly. Even a minor accident can cost thousands of dollars. There are damages to your car that may need to be repaired, damage to other people's cars and their property. What if you hit a telephone pole? Have you ever priced a telephone pole? I did one time. They're pretty expensive. There might be medical bills that need to be paid for yourself and others who might have been hurt in the collision. Lost wages from those people that were recovering from those injuries. Pain and suffering, if they're going to sue you, they get paid for that too. And there might be fees associated with any fines or prosecution for yourself if you are deemed to be at fault in the accident. So there are a lot of costs that can be involved in a collision, and we want to make sure we have insurance to help cover those costs, because not all of us have enough money in our pockets to cover those kinds of expenses. So knowing how much it can cost to recover from an auto collision, think about how you might pay for that. Let's see, do you have a bank account with enough money in it to pay those expenses, those medical bills and repairs and fines and other fees? Maybe you have parents with enough money to help you pay for that. A rich uncle? Rich uncles are helpful if you have one. Or a best friend that's willing to lend you the money. That's awesome, but most of us don't have access to that. Do we have insurance? Maybe that's what we need to rely on if we need to recover from an auto insurance accident. So what exactly is automobile insurance? It's simply a contract between you, the insured, and an insurance company, the insurer. That company agrees that in exchange for a premium, regularly scheduled payment that keeps the policy in force, they promise to pay for specific car-related financial losses during the term of the policy. Once the policy expires, the coverage expires as well. A new policy has to be purchased. But it's simply a contract that explains who's going to do what if these certain things happen. So we know what auto insurance is now. We know how it works. and why it's a good idea to have it, but do we actually need it? Actually, yes. Auto insurance is the law. In the state of Florida, you are not allowed to operate a vehicle a registered vehicle with more than 4 wheels without auto insurance. And the bottom line is there are risks that we can't afford to take. So what would happen if you were involved in a crash that causes property damage? Talked about that cost of that light pole. What happens if you run into the front of somebody's house or you hit a very expensive car? It's going to cost money. What happens if you hurt yourself or someone else? There's going to be medical costs that you would be liable for. What happens if your car's damaged while you're not even driving it? Hail damage happens in Florida. People vandalize your car. Somebody comes along and keys it or hits it in the parking lot while you're not even in the car. Your auto insurance can help you recover from those incidents. Or if your car is stolen, oh my heavens, it's gone completely. Now what do we do? And besides all that, cars actually can break down and it's costly to have them towed. So you can include coverage in your auto insurance policy that will help cover the cost of that as well. Let's look at that. So on your screen, you see a list of the different types of auto insurance coverages available. We're going to look next at each of these a little closer. The first type of coverage we'll talk about is liability coverage. When you cause bodily injury or property damage to another person or their vehicle, you're liable for the cost of that. When you see this type of coverage quoted on your policy, listed on your policy, you might see it as this example you see on your screen, 100/300/50. And to explain what that means, those numbers indicate that this policy at that premium rate would cover $100,000 of bodily injury coverage per person. And then there would be a limit of $300,000 bodily injury coverage per accident. So you are only allowed to cause $100,000 worth of damage to another person up to 3 people per accident. Can't be 4 people in the car, and they can't be hurt more than the cost of $100,000. And if you cause property damage in that same accident, there will be a limit of $50,000, or any accident. There will be a limit of $50,000 per accident. So think about that when you're looking at your liability coverage limits, and consider how much it might cost for medical expenses for someone else who might be damaged in a car or in an accident. And how many people might be riding or involved in that accident. That's not just riding in the other car, that's riding in your car too, because your liability coverage covers everybody but you that was involved in that accident. Anybody on the street, anybody in your car or the other person's vehicle. And only $50,000 of property damage. There's a lot of cars out there that are worth more than $50,000. There's a lot of them on the road. Be careful if you're going to choose this coverage. Just be extra careful while you're around more expensive cars. The next type of coverage we'll talk about is comprehensive and collision coverage. Comprehensive. Think about that word. When you comprehend something, you understand it. Think of it this way. The insurance company understands that stuff happens. And so their comprehensive coverage covers the cost to repair your vehicle. This isn't for everybody else's vehicle. This refers to your vehicle for damage that happens, from stuff that happens, natural disasters, somebody vandalizing your car, stealing your car, a fire that happens to happen, whether it catches fire or it's sitting somewhere where that fire occurs. deer runs out in front of you. You can't help that. Something falls on it, or the glass gets broken, the glass cracks. This is the coverage that takes care of that. So it covers the cost to repair your car if you were at fault in a collision as well. So this is all about covering the property. It's actually, because of that, it's required if you are financing your car. Until it's paid off, your lender will require that you maintain comp and collision coverage on your car. When they say full coverage, that's what it includes, the comp and collision. Then when that car is paid off, you can cancel this coverage if it doesn't make sense to keep it, if the cost of it exceeds the value of your car. So we talked about the coverage that protects the property, but what about the coverage that protects you? This is included in medical payment, PIP, personal injury protection, and no-fault coverage. So medical payments cover you and your passengers if you were at fault in an accident. If you're not at fault, the other person's insurance should cover you, their liability insurance. Personal injury protection covers lost wages if you can't work as the result of an accident. So it's a little bit of protection for you as well. And the no-fault coverage, it doesn't mean that you are not at fault in the accident, that no one's at fault in the accident. It actually means that we're going to go forward without a decision on fault and fix and start working on the claim, the insurance company says. It allows you, the policyholder, to submit your claim instead of waiting to see whose fault it is and work it out later, which is a very nice feature. All right, you're a responsible driver. You have sufficient coverage to protect your property and the people you care about and the people you may hurt. But what if someone else doesn't? Actually, we know it's kind of likely that they don't. If you drive in the state of Florida, stop and think sometime while you're sitting at the traffic light that we rank highest for uninsured motorists in this state. So if you are looking at 3 other cars, probably one of them doesn't have insurance. Keep that in mind. You can protect yourself against that. It's called uninsured motorist coverage. It covers you if someone injures you or damages your car, and they either do a hit and run, back into you in a parking lot, and don't leave their contact information. This protects you from that. If they don't have insurance or don't have enough insurance, this uninsured motorist will protect you from that. The last types of coverage we'll talk about are rental, towing, and gap coverage. Rental coverage covers the cost of having to rent a car when your car is not available because it's recovering from a covered loss. You can opt for towing coverage that will pay for the cost of towing if your vehicle is damaged and can't move on its own or has engine trouble, some sort of trouble. It's very costly sometimes to get hire a tow truck, so you can protect yourself from loss by opting for some sort of towing or roadside assistance package through your insurance coverage. Limits will apply on the towing, mileage limits. They can only tow cars in automobiles so far, so you want to check on that. Also, gap coverage. Gap coverage will pay the difference between what you owe on the vehicle and what it is actually worth at the time of your loss. So we've all heard of being upside down, I hope, meaning you owe more on your car than it's worth. what if while you were upside down in your auto loan, you had a collision and the insurance company said the car's totaled, it's too damaged to fix, so we're going to total it. They will give you the book value for that car, not what you owe in to the financing company. Gap coverage pays the difference, that gap between those two amounts. It's a way to protect yourself from loss. You'll often be offered gap coverage when you buy a vehicle at a dealership. You don't have to opt for it there. You can talk to your insurer about their gap coverage. And something to keep in mind with gap coverage is that if you don't have to use it, if you end up making enough payments so you're not upside down in your loan, and if you were to have a collision and your car was totaled, the insurance company would pay off all of the cost of the payout would be enough to pay for the financing on the vehicle. Then you can call and cancel gap coverage and receive a return on your premium. So you can get a little bit of money back if you don't need it. That's a good feature. So those are optional coverages that you'll be asked to choose, and you might want to consider your needs in deciding whether you opt for rental, towing, or gap coverage. Each of those coverages we just discussed is priced according to the insurance company's perception of your risk as an insured, and that premium is based on the percentage of coverage you have, the coverage limits for liability, comp, and collision. Now let's look at how the insurance company decides whether you're a good risk or not. So perceived risk. The insurance company wants to protect themselves from loss, and they really want to not have to pay out a lot of money. They'd like to keep it to pay their shareholders and their employees, right? So they want to make sure that they're working with less risky insureds. They have a screening process that helps them determine that. So some vehicles and some drivers carry more risk than others. Also, after they do that assessment, that screening process, you can be sure that if they consider you a low risk, they'll offer you a lower premium. You will pay less for your auto insurance policy. However, if you're perceived to be a high risk, you're going to pay more for that. That makes sense. They want to make sure they recover enough money from you to help them pay for the risky things you might do. Next, let's look at that screening process that I mentioned. What actually determines the premium? Well, there are certain factors that the insurance company will look at because statistics show them that certain factors affect who is a lower or higher risk. Things like age. Are you a new driver? Or are you a more experienced driver? That's going to make a difference to them. How about your gender? Statistically, there is one gender that has shown themselves to be a more safe driver over time. Not going to go into that here. Vehicle type. Do you drive a fast sports car, something high-powered engine, or is it something with a little four-cylinder that carries a lot of people? Maybe it's a minivan. That vehicle type makes a difference in the perception of risk. Also, the driver's driving record. Do you have a lot of speeding tickets? Do you have a lot of collisions? That's an indication of how safe and responsible a driver you have been. And unfortunately, the insurance company can't predict the future, so they have to base their perception of risk on your past history. Hopefully, you can, over time, if you have a poor driving record, you can, over time, show the insurance company that you are now a more responsible driver. Did you know that your geographic location affects your premium? Some cities are perceived to be higher risk. They're denser, there's more cars, more probability of a collision. Some areas are seen as more theft prone. I moved from one county to the next, and the only thing that changed was my address, and my premium dropped on my insurance policy a few years back. It was interesting to see that happen. So they look at all those factors, and they also look, oh my, at your credit score. Why does your credit score make a difference in your premium? Well, the insurance company wants to make sure that you're going to pay these premiums. In fact, about 40% of the premium quote is based on your credit score, and those other factors together to the other percentage, the 60%. That's a big factor, but it's important. If you have a higher credit score, that shows that you probably have paid your bills on time, not defaulted on debts, and been able to handle your finances in a responsible way. They want customers like that. They don't want to have to chase people around for their premiums, right? Also, the last factor is the deductible. The deductible is the amount of money you have to pay for the insurance company to do their job in certain situations. And we'll talk about that next. What did I just say? The deductible is what you have to pay for the insurance company to do their job? Kind of like. And this is the part about insurance that personally kind of peeves me, but the deductible is the amount per accident that you pay out of pocket before the insurance starts to pay their part. You've been paying your premium to have this policy in force, and now you need to use it, but now you have to pay an additional amount on top of it before you can use it. I'm not going to try to explain why. That's how insurance works. Your deductible. Common deductible amounts are usually $250, $500, or $1,000. You, the insured, will select the dollar amount you choose for the deductible. And what you'll keep in mind is how much money do you have available to pay this deductible if you need your insurance to cover a loss. Do you have $250? Or just barely $250? You might want to select that. If it's hard for you to get together $250, you should really select $250 for your deductible amount. If you have an emergency fund with a sufficient amount in it to cover that deductible of $1,000, you might want to select that, because the higher the deductible amount you pay or you select, the lower your premiums will be. If you can afford to get that insurance coverage started, that recovery started with $1,000, then you will pay less in premiums for that coverage. And so it's tempting to choose a higher deductible and save money on your premiums. However, if you should have to need to pay that deductible and can't scrape together $1,000 easily, you might want to pay just a little bit higher throughout the year to make sure that you could recover from a loss. Now you know all about auto insurance, how it works, how it's priced, and it's time to call for a quote. You're going to Contact your insurance agent and give them some specific information so they can provide you a quote for how much your auto insurance will cost you. They'll need to know things like your vehicle identification number. They want to make sure they're insuring the right car. If you're not sure where to find your VIN on your car registration, title, or on the vehicle, you can Google that and find an example of where to find that. Also, they want to know the vehicle's year, make, and model. That will let them know how safe or well kept that vehicle might be. They also want to know about any safety features you might have that could possibly lower your insurance premium. Those anti-lock brakes, airbags, security systems, they will help lower your auto insurance premium. So make sure you let the auto insurance company know you have them. Also, any other features that you would want to have insured, special features on your car or something like that that are costly, you would want to disclose to them that about those features as well, so they can price your premiums accordingly. They will want to know your social security number so they can access your credit file and find out how likely you are to make these payments going forward. They'll also want to know your driver's license number so they can look up your driving history and find out how safe of a driver have you been in the past. They'll put all that information together and provide you a quote. Something to remember when you look at the quote they provide is don't look at the bottom number. You're going to get a quote from hopefully more than one insurance company. You want to make sure you compare prices. And when you're comparing those quotes, make sure you're looking at the specific coverages and the limits that are included on those coverages. That makes a difference to the policy. If you're just looking at the bottom line, the total cost for the policy, you're not comparing apples to apples. So make sure that you are looking at the specific coverages and the limits on those coverages, like we talked about. And you can save money on your insurance policy by avoiding payment plans if you are able to pay for a year's worth or 6 months worth of premiums all at once. Your insurance company often offers, almost always offers, a discount for you being able to do that. Then they don't have to worry if you're going to make those payments. They're already paid. They have your money and they're happier that way. So you can save money if you can do that. Once you accept that quote and purchase that policy, I highly recommend that you get to know that policy. The last thing you want to do is to find out you're not insured for something that has happened after it's happened. And it's best to know what you're paying for, right? This is an important document for you and your vehicle. So you want to know that the first section you'll see are the declarations. What did you declare will be covered? What item? And this includes the specifics of that vehicle. You'll also want to know what specifically will they pay for. Some coverages are voided if you use aftermarket parts or something like that. So you want to make sure that you need those exclusions, what they won't pay for. If you happen to put a sound system, an expensive sound system in your car, did you declare it? Will they cover it? Is something like that excluded? You need to know that. Also, you want to know what conditions might be required for that insurance policy to remain in force, such as ensuring that you're wearing your seatbelt at the time of a collision or following road rules at the time of a collision. Those are requirements that you'll probably see in the policy. You want to be aware of that. because you don't want an insurance company to say, yes, thank you for these premiums, but because of this, we can't cover your loss. Also, the last part of the policy are the definitions. Any words that you don't understand that are confusing to you, you can find the definition in the back of your policy. Also, your insurance agent should be able to explain any confusing language or conditions about the policy to you. That's their job. And if they can't explain that, that might be a big red flag that you would like a different insurance agent. There are a lot of things you can do as a driver to reduce your risk. The suggestions on your screen are just a few types, but just keep in mind, use your seatbelt. We wear seatbelts and shoes for our protection. We wear face coverings and pants for other people's protection. If we observe the speed limits, are conscientious drivers. Try to be patient. Don't drink and drive. And maintain a good credit score. Keep your vehicle in good shape and consider the perception of the type of vehicle you might be interested in purchasing. If you can do all those things, you can reduce your perceived risk and save money on your auto insurance premiums. One relatively new feature used by insurers to help insureds save money on their auto insurance policy are these event data recorders, otherwise known as black boxes, that record certain features of your driving habits and report that information back to the insurer. Actually, parents can use them to monitor their kids' driving. They can report their youth's driving habits back to themselves, but it's a nice way to actually confirm that someone is as good of a driver as they think they are. So that if you allow the insurance company to monitor your driving habits and you're a good driver, it is another way to save money on your auto insurance. I would be remiss if I closed without mentioning Florida state required auto insurance coverage for my fellow Floridians. Florida requires all drivers to maintain minimum coverage on any registered vehicles with at least 4 wheels. Bottom line, that's the answer. If you don't do that, you can face a fine and lose your driving privileges. So the state required for all vehicles in Florida is a minimum of personal injury protection of $10,000. That's not a whole lot. And property damage liability of $10,000. That's the minimum. If you fail to maintain state required PIP and liability coverage, like I said, you can lose your driving privileges for up to 3 years. And if you want to avoid that happening to you, if you can't afford auto insurance, then you will need to surrender the auto tag to avoid a penalty. If you have a registered vehicle and it is not insured, you're facing a fine and the loss of your driving privileges in the state of Florida. PIP and property damage liability of $10,000 is so minimum. You can't hit anything. Any vehicle that might be financed is probably going to be valued at more than $10,000. And what isn't covered by that minimum required coverage has to come out of your pocket. That can be a huge financial loss. Well, we have covered a lot in the last few minutes, haven't we? We've talked all about auto insurance, what's required, how premiums are priced, how we can be perceived as less risky and save money on our auto insurance. And we know now that good driving habits and spending habits result in lower auto insurance costs. And how did we learn all this? Well, we learned it from our local county extension office. And when I say extension, I'm not talking extension cords, lash extensions, or even hair extensions, not even leg extensions. I'm talking about the University of Florida IFAS Extension Service, which is a part of a federal land grant university program that's been around for more than 100 years providing adult education. Extension is in every state in the nation. In Florida, we are fortunate to have great support from our county offices, so you can find an extension office in every one of Florida's 67 counties. The University of Florida trains its extension agents to provide quality presentations using research-based, non-biased information that helps you make better decisions for your life. Thank you for joining me today to learn all about auto insurance, and specifically Florida auto insurance coverage. I hope if you have any questions, you can scroll back to the beginning of this presentation. My contact information is right on the first slide at the very beginning, and feel free to call or email or stop by our extension office. Thank you and have a great day.